Hey there everyone, this is Joe from Bullion Now, bullionnow.com.au, selling you the best bullion bars and coins shipped to you worldwide from Melbourne, Australia. This is your weekly precious metals technical analysis where we take a look at the big four: gold, silver, platinum, and palladium. Of course, head over to youtube.com/bullionnow. Right now, at Bullion Now, 348 subscribers, about 20 over 25 in the last week. That's good for us. We're really going well, I think, on the old YouTube. You guys seem to be liking it. So hit the big red subscribe button right there. Let's get straight into it. My goodness me. What another week it's been in the precious metals. We'll take a look at where we were 7 days ago. This is gold, based in US dollars. We're using the tradingview.com website. Now, as you guys know, as my subscribers already know, but if you're watching this for the first time, what I do with technical analysis is I give you a bias. And it's usually sort of 51% to the upside or the downside, for the coming week. And then I look at the targets which may come if it goes lower, and the targets which it may come if it comes higher. So last week I was giving and I like to stay as close to the fence as possible. So rather than saying, it's 100% going to go to higher prices, I kind of just keep it like 51% either way. So last week I said a 51% bias to the upside versus to the downside. But here's where the prices would go down to if we went lower, and here's where I think the prices would go to if we went higher. And I was talking about the area in gold I was talking about the psychological value right here of $1,500. I was also talking about this level right here. You can see it intersects with these few levels of previous support up there, and that's at approximately 1530. So let's go back 7 days. We're looking at on the monthly. 7 days ago, 1, 2, 3, 4, 5, 6, 7, and that's when we were still way down here. And so my bias was to the upside, but I did say, hey, if we go down further, we might punch down to, a couple of levels if we do. If we go higher, here's the psychological value of 1500, and here's the next level, which I think we would, max out at. Well, what do you know? Look, where we did punch above the $1,500 level, and we've just been in a great bull run. How good has it been? How good do you feel too? I know you guys feel good about it. Most of you, that is. Probably some of you who want to buy at lower prices. That sucks, but look, I wouldn't wait. Just don't wait. There might be a little retracement, but I wouldn't wait too long. We have topped out so far, again based on this particular exchange price, at a high of $1,510.43 in US dollars. That is. So we're definitely within, in my opinion, and not in just my opinion, based on sort of the technicals as well, we're starting to get into slightly overbought territory. So if we saw a move down from here, rather than posting a higher high and a move down from here, it wouldn't surprise me. I'm going to stick with right now. With gold, I'm going to stick to a completely 50-50 on the fence right now, rather than saying definitely going down from here or definitely continuing up before a retracement. So 50-50 right now. So I'll give you my price targets for the downside first, and then my price targets for the upside. Let's talk about the downside. So if we have topped out right here, and just keep in mind, for example, let's pop back onto the weekly. What you'll notice right here is in the relative strength index right down here, we're definitely in overbought territory, and we don't stay there forever. So we, as you can see right here, it goes up and down, up through overbought and oversold, overbought, etc. Definitely in overbought territory. We've had a decent stretch, a decent run. So retracement's coming soon. But as I said, 50-50 chance at the moment. Let's take a look at where I think the next prices could be if we move down further. You'd be looking at approximately, I reckon, the 18 average of highs right here. That would be at approximately around about your sort of your $1460 level. We could make it somewhere between, look, I'll give you a range. I think the range could be anywhere between 1450 and about 1470 roughly. That's where I think we could retrace down to. So my call for gold, if we are moving down lower from here, if it is a retracement, anywhere between 1470 and 1450. That's my call on that. Now, of course, none of this is financial advice. This is just what I'm thinking personally. If we are moving higher from here, let's take a look at where we could go to. And obviously, the next main one would be to this level. I've got to pop it in a little bit closer. As I've showed you here, right here, 1, 2, and 3, kind of 4, 5 points right there, technically, at least on the weekly time frame. You've got that level at around about 1530. So that's where I popped in that next line. I can move that down, do that. So we could have a quick spike. If we're moving higher, could be a quick spike up to 1530. I'm actually going to call a slightly higher level as well as an absolute max out. So I think if we have yet to finish this quick little run up, I think we could go anywhere from between 1530 up to this level right here. Can you see that right there? If you can just squint, and I'll maybe even just zoom in a little bit. You have this next level of previous support, and it's right there at 1555. Now that's actually quite close to this old Fibonacci level, and if I show you that Fibonacci, we'll take it back onto the monthly so you can see the big picture right here, the big picture, and that's going from actually the low of, where were we, down at $250 back in 2001, and to the high of 1920. So you've got this Fibonacci level, which is the 78.6. Can you see that right there? And that's at 1564. Now these levels aren't exact, so I'm going to say a max, an absolute max of about 1565 as a max before we would see a retracement. And we do need to see a retracement, and we need one, and we need a healthy one. A retracement is healthy, I should say. So my call, if we are moving higher from here before we see the retracement down, and let me just get that back in the place where I had it, which was about 1500, is a maxing out at between 1530 to 1565. I know that's a big range, but somewhere within that little window right there, if you can see right about there, is where, if we are moving higher, that's where I would expect it to sit, somewhere in between there. Again, 50-50 chance whether we're going higher or lower from here. So you've got my low targets on gold and my high targets on gold with a 50-50 chance. Let's just take a quick look, as I like to do these days, at the gold price in Australian dollars, because if you're watching this not in Australia, you're going to be looking at this chart going, what the hell? What the hell's going on? Why is this? Look at this high price, and look at the previous high, and now we're at a higher high. Well, that's obviously because we're in Australian dollars, and the Australian versus US dollar ratio has changed quite significantly, and that's why. I'll show you that in a sec. But we've topped out so far at a high in Australian dollars of 2,242 roughly. And I tell you what, we've been very busy here in the store, on both the buying and the selling side. People coming in, saying, oh, I bought back here. Oh, I bought back here. Isn't it great? And people saying, oh my God, I didn't buy here and I forgot to buy here. I thought it was going to go down, so now I've got to buy up here. So it goes both ways. But it's good to see gold in Australian dollars making new all-time highs. It's definitely fantastic to see. I won't talk about price targets for Australian dollars simply because it's more based on the US dollar price, and it really depends on what the AUD USD is doing. So what you can see here in the last, let's see, that's going back to the 18th of July. We've seen a sharp decline in the Aussie dollar versus the US dollar, down from about 70 cents all the way down to about 66 and a half, roughly. Now, the big dip just recently is apparently because the New Zealand government lowered their interest rates by approximately, well, not approximately, by exactly 0.5%. So instead of 0.25, it was by 0.5%, which is larger than what people expected, because the Fed, as in the Federal Reserve, which is neither federal nor does it have reserves, but it dropped its basis point, its points by 0.25, so 0.2 quarter of a percent, and New Zealand and some other countries as well lower their interest rates by double that. And so people have gone, oh, holy moly, what the blazes is going on? I better get into gold. And that's why we've seen, why we've seen a spike in gold in USD, but then where we've seen an even higher spike in AUD because of the drop in the Australian dollar against the US dollar. Whew, that was a big mouthful. I hope that made sense. So that's gold. I've given you my price targets in USD. Take a quick look at silver. Now, I'm even more happy with my call on silver. Look, this stuff is pretty obvious anyway, so I'm not acting like, oh, look at me, I'm the greatest, whatever. So it's pretty obvious, right? Why? Because it's a previous area of resistance. It's really not that hard. You just pop in, you just find a couple of levels where it's been level of resistance a number of times. So you can see right here, look, 1, 2, 3, 4, right there, maybe even that one, 5, 6, 7. So all you do is you just pop in a line. That's pretty damn easy. And it was also intersecting over the last few weeks, and actually the last couple of months. I've been talking about this particular trend line going through this low here of approximately $8.50, and this other low of higher low that is of about $13.60, and you get your trend line. So it was coming up to a very key point. It was both a resistance point here 6 or 7 times, plus it was coming smack bang into this top end of this trend line. So last week I called, as I said, for all the metals, I called a 51% bias to the upside before a further move down, and I called at a dollar value of between $17 to $17.20, and lo and behold, we've had that spike up to exactly $17.24 roughly. So I would call that pretty much bang on the money, and look at that trend line. That's just worked out really, really nicely. So again with silver, I'm going to stay right on the fence, 50-50 chance that we retrace a little bit from here or that we go higher. I'm not going to give you a bias to either side, but I will just talk about the targets. So let's pop down onto the daily. And as you can see, last time we were 1, 2, 3, 4, 5, 6, 7. Yes, we had yet to have that quick little dip down. And actually, if you'll remember in the video last week, we were hovering about here at about $16.20 roughly. And I said we could see a further move down before we see, higher prices, which I thought were coming. And I did make a mention of approximately your $15.80, $15.90 level. We didn't make it all the way down there. We got it to about $15.90, roughly 95 cents, something like that, just a little under $16. So that was pretty close enough for my call for a quick dip, and then we've seen that rise again back up to the $17.20 mark. Moving down further from here, if we are moving down further, if we're not moving higher from here, you're just looking at coming back to the previous old little high, and that's at around about $16.66 roughly. Again, it's just based on this current price, exchange price that is. Yours might be a little bit different. And look, what do you know, that happens to coincide right there. That little level right there happens to coincide like bang on with the 18 average of highs on the daily time frame. So I think if we're going to move down, we're going to move down anywhere between halfway between this point and this point. So I'm going to call it anywhere between approximately, if this is a retracement from here, anywhere between, let's see, about $16.80 down to approximately $16.60. So anywhere between $16.80 to $16.60 is, I think, where we would retrace to if we are seeing a retracement from here. Now, we want to look at the 4-hour, just out of interest. I am staying non-biased at this stage. I am staying neutral. But are we in a setup for higher prices? Possibly. Look, you've got, if I go into the 1 hour right here, Let me have a look, and we'll pop in a little trend line. Has that broken? Maybe that has actually broken. I want to see that. Oh yeah, no, that's actually broken a couple of times right there. I'm going to stay with just biased. Definitely, sorry, not biased, neutral for the moment. So let's talk about moving higher, and thank you for your patience, everyone. This is going to be a slightly longer one today, I think. A little bit more to talk about. Let's look on the daily. Actually, no, let's look on the weekly. Right here, we need to zoom out a little bit. If we are pushing a little bit higher before a retracement, and we will have a retracement at some point, what are the next prices? Well, you'd be looking at approximately, and I'll put in a whole bunch of lines here. It's going to get very, very complicated. But right about here, as you can see, it's intersecting with this level here, and that's at about $17.70. And moving higher, I don't think it could get much higher before a retracement than this level right here at approximately $18.20. Definitely don't see it moving above $18.20 before we have a retracement, which we absolutely have to have, and it's very healthy to do so. So I'm going to make a call that if we are seeing higher prices from here, it's going to be somewhere within that window. And it is a large window, admittedly. So again, it's not some sort of soothsayer, right? But anywhere between a high of $17.70 and $18.20. So about a 50-cent difference, which is actually quite large in the silver game. But anywhere between that, $17.70 and $18.20, if we are moving higher from here, that's where we might top out at. So we could come up to $17.70 and then retrace back down, or we could come all the way up to $18.20 and then retrace back down. So that's my call on silver in USD. Again, showing you on AUD just for S&Gs. Right here, look at silver in Australian dollars. We are above the $25 level right now. Look at that, fantastic. Since, where are we? Since November last year, we have climbed from, what's that, $19.30 to $25. Fantastic. And if we take a look here, we're definitely out of that trend. Let me go there. Way out of that trend line. We've just smashed through that completely. That's actually been a while ago, but that is well and truly out of that. Bull market, absolutely 100%. We are in bull markets for all of these. The beginning of bull markets, most definitely now. I don't see lower prices coming at all. In terms of much, lower than, kind of this base level here. I don't see that happening at all. So moving higher again, well, I've talked about silver. I won't talk about it in terms of Australian dollars again, because it really does depend on what it does in US dollars. And again, it does depend on what the Aussie dollar is doing in terms of its ratio against USD. So giving you my targets for silver on the downside, silver on the upside. And let's move on to Platinum. I don't remember what I said last week. I'll have to count back. 1, 2, 3, 4, 5, 6, 7. Okay, so we've had a dip and we've sort of come back. So it's more neutral at the moment. So I think I called a 51% bias to the upside for all of them. So this call wasn't correct because we have had a dip. Oh, no, actually, last week I was talking about, I don't remember. I'll have to go back and watch it. But I think I was talking for possible higher prices. But we haven't seen that just yet. Maybe we've just kind of technically sort of neutraled out right there. I won't talk about my price targets because they are the same as last week. Just talking about the well within still this symmetrical triangle pattern right there. So we've yet to break out of that. It's been quite a while since we've broken out of it. So we're still well within that. And moving down, we've got those targets. And if you like, you can just pause the video and just read the price targets on the side here. So just match up the blue line with the numbers right there. And those are my targets moving down and my targets moving up. And I guess my last target moving upwards from here. I might as well put it in now. It's very easy to tell. It's just that one there. And that's at approximately 900 and... I will move that down actually to right there at 900 even. That would be my next price target. If we break out of this symmetrical triangle pattern, as in the next week, then I would expect a test of approximately 900 to be the next level before we had a little bit of a retracement and then back down to test this trend line right here. That's platinum. I'm going to keep it easy for platinum. And finally, we're going to take a look at palladium. We will also take a quick look at the gold to silver ratio as well, just for fun. Here is palladium. Again, it's been on that big tear. I've been talking about a potential for a double top. It's not out of the woods for a double top just yet. So the double top is where you come up, you come back down, you come back up to meet the previous high, and then if you break this area right here, then it's whoop, down we go. If we do that, and I'm going to stay neutral on this one as well, so 50-50 right on the fence. If we break down through here though, you're looking at the old high of 1150. Breaking up from here, I've talked about the last couple of levels would be the psychological value of 2000, and then that big next Fibonacci level of about 2660, but that's a little bit further in the future. So that's palladium. I'm going to keep it at that for palladium. There's really not a lot else to tell. I'm going to stay non-biased on that one. I'm going to stay neutral. And lastly, take a look at the gold to silver ratio. Thanks again, everyone, for your patience. Really appreciate it. And we've seen a little bit of a break back up. So we had that large retracement down from 93.5 roughly all the way down to 85.7. And since with gold rising and silver most sort of lagging behind, that's why you've seen a rise in the gold to silver ratio right there, and hovering around about 87.6 right now, but we did top out at close to 90. So that's the gold to silver ratio. I think we could, my bias with the gold to silver ratio, because this can be different to just the metals, the metal prices, my bias at the moment is to the 100 to 1 side before we see the big dip. I think we're just creeping our way up to 100. That's my opinion, of course, and none of this is financial advice, and take everything I say with a grain of salt. Of course, hit the big red subscribe button on YouTube. Join the family. I don't know why you haven't already. Nearly 350 subscribers, and that's a huge. We're only at like 300 subscribers 2 weeks ago, so the ratio of subscribers is getting better and better. We're getting more and more as the days go by, and it's getting quicker, if that makes sense. So head over to youtube.com/Bullion Now. Hit the subscribe button for all our weekly videos. We do like 4 to 5 videos per week. We do our weekly auction. We're now doing an interview series as well. Watch the first one. Happens to be with this handsome young gentleman right here. We do our weekly, of course, precious metals technical analysis. We do spot specials, and Michael does his Michael's mini rants on various educational topics to do with precious metals. We do epic unboxings as well. Lots of other stuff. There's all the reasons in the world to hit the big red subscribe button right there. I'm losing my voice. It's been an exciting day speaking to about 10 billion different customers on the buy and the sell side. So I'm going to go. Stay safe. We'll see you next week, and we'll speak to you soon.